Do you believe we're on the precipice of a recession, as a lot of people believe?
We're going to have a recession.
View of the macro picture here is that it has deteriorated and it's put us on course for a recession.
So where will stocks go from here?
That the bearish narrative is incredibly compelling.
Hello and welcome to today's video. Have you taken a good look at our current economic situation? Can you feel the recession in the air? Are you wondering whether we're in a bear market or not? To answer all these questions, in today's video, Mark Yusko has discussed the macro picture of the economy. To know more details, stay tuned until the end of the video. And of course, if you want to stay up to date with the latest crypto insights, markets, and the economy, be sure to hit that subscribe button and the bell icon. Okay, you ready? Let's get into it.
We've been in a really precarious place from a macro perspective for a while. I mean, coming up on the better part of a year since the Fed really, and not just the Fed, all global central banks really committed to withdraw liquidity out of markets. And look, macro is really not that complicated. You know, it's supply and demand. And when you increase the supply of something, the price falls. When you increase the demand for something, the price rises. And the same is true for money and value. And they, increase the supply of money for literally 100 years. For 100 years in the United States, we've had constant increase in money supply, 6% on average. The Japanese make us look like pikers. They grow at an even faster clip. And assets around the world rose in terms of money illusion. Right? One of my favorite stats is if you look at the S&P 500, it looks like it's making new all-time highs. Not quite today, but over the years makes highs. That's only because we price it in a devaluing asset, the U.S. dollar. If we priced in gold, which is the perfect store of value or real money, stocks are unchanged since 1997. That's a long time ago. So it's really interesting where we are. And, what was interesting at the beginning of this year, after the barrage in 2022, the worst year for the 60-40 in history, worst year for bond markets in 140 years, really bad year for the stock market.
According to Mark Yusko, we're knee-deep in a sticky situation from a macro perspective. For the past century, the money supply has been on a never-ending growth spree in the United States. As the money supply kept expanding, it created this illusion of rising asset prices around the globe. It's like we were all caught up in a money mirage. Now we're in this intriguing and slightly nerve-wracking situation. The question is, where do we go from here? Will the central banks ride in on their white horses and save the day? Talking about crypto and the stock market, you see, the markets are like that wild roller coaster you jump on, and some days it's all thrilling ups and downs. But here's the thing about bear markets. They're all about those downward slopes with occasional sharp bounces when we hear good news, or what we think is good news. I hate to break it to you, but according to Mark Yusko, it's time to brace ourselves for potential further declines in stock prices. It's like we've entered a maze of economic complexity with no clear path ahead.
We're at this funky place where economically we're in recession. What do I mean by that? So last year, GDP growth was 1%. That's a recession, right? 2001, we grew 1%. We were in recession. They actually called it a recession. Anytime you're sub 2%, you're at stall speed, and that's recession. This first quarter was 1%, again, year over year. That's a recession. Now, you can pretend it's not, but that to me is like the ostrich, right? The ostrich standing on the savannah, the lion comes out of the bush, the ostrich turns his back, lays its head on the sand. It actually doesn't bury it. It just lays it down and pretends the lion can't see it.
That's
the lion
hilarious.
still eats the ostrich. The ostrich just doesn't see it happen because he's turned the other way. And so we can pretend there's no recession, and we can pretend that we're in a bull market. We're not. We're still in a bear market, right? The markets are down. And what is a bear market? A bear market is a market that goes down most days and goes up sharply on good news or perceived good news. There are no up 3%, 4% days in bull markets? None. Because what's a bull market? A bull market is a market that goes up most days, a little bit, just up, but goes down sharply, okay, on bad news or perceived bad news. So just like, there are no up 3-4% days in bull markets, there are no down 3 or 4% days in bull markets. In bear markets. So the fact that we have these big up days in the first quarter this year says to me that we're still in a bear market. We're still in a very weak economy.
Mark Yusko commented that we're right smack in the middle of a recession. Last year, our GDP growth was a measly 1%. And you know what that means? Yup, recession territory. We've been in this kind of pickle before, back in 2001, when we also had 1% growth. And guess what? They officially called it a recession. Now, let's talk about the first quarter of this year. You won't believe it, but we had the same 1% growth compared to the previous year. Can you smell the recession in the air? It's getting stronger. We can't just wish away the recession or pretend we're in a roaring bull market. Now, we're still in the bear market zone, my friends. The markets are mostly down, with the occasional surge when some good news pops up. The fact we saw some significant upswings in the first quarter of this year doesn't change the overall picture. Mark Yusko believes that we're still stuck in a bear market, and the economy remains pretty weak. Let's get into the next clip to hear more from Mark Yusko, and don't forget to give a big thumbs up to this video.
We have this hope that somehow the Fed and other central banks will rescue us by increasing liquidity. But if you look at the actual data, M2 growth is negative for the first time in 100 years. And yes, China tried in third quarter last year to put $1 trillion with a T dollars of stimulus into their economy, but now they've started taking it out again. So we got it going the wrong way. So global liquidity is actually not growing. And if global liquidity is not growing, it's tough to argue that you're going to get this resurgence of expansion. Without resurgence of expansion, it's hard to argue that stocks are fairly valued. Can't argue that. And in the absence of interest rates going back to zero, which is unlikely, stocks should have another leg down.
Let's talk about the hope that's been floating around. That lingering hope that we have deep down inside that the Federal Reserve and other central banks will swoop in and save the day. But you see, the Fed has been playing with interest rates, manipulating the markets, and we're left dealing with the aftermath. And here's the reality check. The chances of interest rates magically plummeting back to zero are pretty slim. So brace yourself, my friends, because that means we could very well see more declines in stock prices. When will the Fed tightening policy pause? What does the picture of recession in 2023 look like to you? Let me know your thoughts in the comment section below. And of course, don't forget to subscribe to my channel for more updates on crypto and the economy. Also, be sure to give a big thumbs up to this video. Thanks for watching, and we'll see you in the next one. Adios.